It's time for your call sheet, where we look at the topics driving the trading day ahead. The crew members today: Ryan Dietrich, Chief Market Strategist at the Carson Group, and now, and I haven't gotten to say congratulations for this, becoming part of the family, CNBC contributor, Steve Sosnick, Chief Strategist at Interactive Brokers, and Daniel Newman, CEO of Futurum. Great to have you all here. Lot to get to. Let's see how much we can cover. Let's start with the big rally for April. Ryan, you called it. You also talked about, before we got to April, the banana peel sell-off. But now that we're here, sell in May, go away?
No, not yet, Morgan. Thanks for having me back, and I hope you've recovered from all the jet lag from flying all over the place. But welcome back. If you think about it, yes, sell in May, go away. We're going to hear a lot about it. The worst 6 months are right now coming up. 9 of the last 10 years, though, these worst 6 months were higher. But let's take a look at April just for a second quickly here. Second best April ever for the S&P 500, at least going back to 1950. I looked at the best 10 Aprils ever. The next month is May. May's been higher 9 out of those 10 times with some really strong returns. And the rest of the year was up like 12% on average, more than double the at-any-time returns. Morgan, bottom line, this is still a bull market. Lots of positives when you get into that. I don't think you should sell in May and go away this year.
Okay. Steve, want to get your thoughts on this market, too. We just had the best month for the S&P and the NASDAQ, which are both sitting at record highs now, since 2020. And yet, oil is about 50% higher than when we started this war in Iran, and yields are higher as well.
Well, Morgan, first of all, good morning. This shows you the market's ability to just put aside things that are relatively inconvenient to it. One of my mantras all along is equity markets are terrible at pricing in geopolitics. And to a certain extent, what we saw this month is it's actually better in some ways to just pretend they're not there. I mean, if I had told you at the end of February that we would have oil $40 a barrel higher, that we would have 10-year yields 40 basis points higher, and we would, by the way, take away pretty much any chance of rate cuts for the rest of the year, would you tell me we'd be zooming higher this way? Of course not. So it's about other factors. It's about momentum. It's about earnings enthusiasm. It's about basically a rush into the tech stocks. I mean, we had a 40% rally in stocks in April. Were we that mispriced before? Are we that mispriced now? It's tough to say. But this is a momentum monster, and to a certain extent, it is about earnings. But yesterday we had we were processing what I would call the four horsemen of the artificial intelligence trade, and two were down, one was meh, and the other one was terrific, and yet that was a backdrop for a monster rally. This is momentum writ large right now. We haven't had the catalysts, to Ryan's point, that often bring big bull markets, such as a positive change in monetary policy. But markets will go up as long as people believe they're going to go up, and as long as people will put money in them.
Yeah, momentum monster. I'm gonna borrow that one. I mean, big rally, Dan, led by big tech. You are our tech guru on this panel. Talk us through it.
Yeah, I mean, I think it all started with the Alphabet result, 63% growth. They have absolutely been terrific, and they've really done it across all parts of the stack, right? Infrastructure, cloud, they have the advertising business. So they're making money, they're creating cash flow. They did have those big gains from the investments, but that's what Google Ventures do. They invest and they make very good choices, SpaceX, Anthropic. But the overall tech earnings were very good. I know some of it sold and some people were worried about the free cash flow, but every one of these CEOs, Zuck, Sundar, Andy, they all understand that they need to overinvest here. Underinvesting is, it's an existential risk to their business. And so what we're seeing here is a build out that sustains. If you want to take some of the risk off the table in tech, invest in the picks and shovels, the companies that don't really have risk of putting services behind the AI that they're building. But if you look at these big cloud providers, all of them have the capacity, the ability, and the understanding of what it's going to take. And Apple was a bit of a wild card there, but Apple delivered, as well. The China headwind wasn't a headwind. The iPhone number was a tiny little miss. Their services numbers look great. My only concern there is Turnus. Is Turnus going to be innovative enough, disruptive enough? You've got companies like OpenAI and Qualcomm working to build the next device, the future. But I still think the iPhone is going to be the future for some time, and they have distribution and they haven't had to spend the CapEx. So I think we came out of this tech rally looking very good.
Yeah. Ryan, I mean, we saw the semi-surge last month, and yet you see Western Digital and SanDisk under pressure this morning, perhaps not surprisingly. But the next thing on tap is going to be big oil. So how much are Exxon and Chevron and some of these other energy players going to matter to this market?
Well, they're going to matter a lot. You look at earnings estimates so far this year, Morgan, up 10% forward 12-month earnings. And where's most of that coming from? Tech, energy, and materials. Most other groups are kind of flat to down. So it's not like a broad-based earnings explosion so far this year. We know those groups are coming from, but listen, energy is a small part of the S&P 500 still, but it's still going higher, and these earnings are going to justify it, in our opinion.
All right, we got like 40 seconds left. Let's see how quickly we can get through this. Steve, your thoughts, what you're watching this morning?
Watching to see again, if does the momentum continue? First day, a new month, you often just get a reflexive rally on it. And as we go forward, let's see if the momentum just persists into May.
Yeah. Dan?
I want to see if that Apple number holds up this morning. Big aftermarket move. People seem to like it, and it's a sign that the tech rally can continue.